programme très, très dense. On va passer à une autre table ronde. Le thème de cette table ronde, c'est comment
ensure financial autonomy for senior citizens. Well, it is a specific kind of roundtable. Those of you who know the chair will understand that we have a program in conjunction with Crédit Agricole in order to value heritage. It is something we started out 2 years ago, and it is about experimenting on different ways to value all people's home. This is called the Valor Program. This program has been designed and moderated by a friend, Jacques-Henri, who is also a researcher and who used to support this project for Crédit Agricole. Unfortunately, he passed away rather suddenly a month ago, so it's kind of tragic for our work. But works are going on, and the question is fascinating. With Arnaud, we wanted indeed to go further than merely experimenting on products. We wanted to do a mapping, if you like, of the needs of senior people, senior families, which are quite different from one situation to another. And then we decided to start this mapping with Amundi and Marie Brière, that's part of the Crédit Agricole. And this is what we're going to talk about now. This real estate valorization program has been designed as, if you like, solutions that were implemented belonging to the Paris financial place, but that could be implemented in other bank networks or financial institution networks. One of our objectives, especially from Jean-Hervé Lorenzi, we wanted to spread this to modest households and providing somehow a public guarantee to these. So all these discussions will be launched today. We're going to welcome Marie Brière, who is the chief economist at Amundi in charge of investment, and who will take the floor for 7 minutes. And before this, I would like to thank Jacques-Henri, André, MASSON, Mathilde, VIENNOT, and Laurent, SOULAT for taking part to our debates. Marie, over to you. Marie Brière. Well, hello, François-Xavier. Hello, everyone. And let me thank you very much indeed for having me today to this round table. Before I start, I'd like to say a few words about Arnaud, who sadly passed away a month ago, and to commend the huge work that he has done with a lot of enthusiasm, indeed. And hopefully we'll be able to continue even without him. So you can count on me anyway. So how can we ensure financial autonomy of the senior citizens? It is a very important question today because the situation is quite unprecedented and difficult, which is linked to the increase of the life expectancy with very low rates, and therefore all pension systems, no matter what they are at stake here. We see this with the pay-as-you-go system that tend to decrease, and we consider the financial systems, pension funds, they are faced with problems linked to sustainability. As a consequence, we need to move towards individualizations of retirement services. Collective systems, as we used to know them, no matter what they were, capitalization, collective capitalization, for instance, used to offer a risk-sharing mechanism between generations, like market risks or longevity risks, but also sharing between the employer, the state, and individuals. And such a risk-sharing mechanism was very important, very interesting in the systems where we head towards more individualization. This collective system disappears. Of course, there is more flexibility. We can adjust and customize products to heterogeneous audiences, so that's good. But risks are higher for individuals because individuals do bear all the risks in the end. So to ensure such an autonomy for senior citizens, we have increasing needs for individual savings schemes. Good news is that senior citizens have more money than younger people between 25 and 64. The life level of senior citizens has improved, higher wages, more women at work as well, and minimum social benefits as well. In addition to this, the seniors have a chance to save money. So when we consider the aggregated figures, the heritage of senior citizen is greater by 14% than people between 24 and 64. So we do have resources to mobilize here, but of course the individual situations are heterogeneous. 7% of senior citizens live under the poverty threshold. It is not as important as it is for active people, 13%. But still, there are disparities depending on individuals, and there are two kinds of populations that are at risk, more vulnerable, that is to say, women, who are more vulnerable when they retire because they have lower wages, they save less money, they have career interruptions. We usually get on average 1,000 euros for women and 1,700 euros for men. And second category at risk are people facing illness. So we live longer, true, because usually women have a longer life expectancy, but growing old without being old is something quite different. So we have a long period of time when we live, but we are somehow disabled or sick. And unfortunately, there are little works that are carried out on this question. So we need to assess the expenses. There is a European survey that is carried out. 2.6% revenues of individuals have to be paid out by individuals themselves in the case of a loss of autonomy. But usually these expenses can reach 15% of the household revenue, so that's quite a lot. So which are the needs when people retire? If we try to classify them, there are three of them. First of all, to cover the needs of cash flows, liquidity, exceptional expenses, health expenses. Second need is to secure consumption, essential consumption needs, so generating regular revenue flows, depending on consumption needs that tend to be higher when people just retire and at the end of retirement. Sometimes because they still need to help their children or they need to cope with health expenses as well. So secured revenue streams that may vary depending on the age of the person. And third essential need, when we have enough capital, would be to transfer capital to children and grandchildren. When we consider saving schemes that are available, do these cover these essential needs? Well, there are two solutions to go for today. The individual can either invest money as he wants and use it as he wants, but the problem is that there's a risk of a capital depletion before death, and that does not generate revenue streams of revenues regularly. Second solution would then be to go for an insurance and go for mortgage. So, of course, that's a protection against the risk of longevity, but fixed and immediate reverse mortgage are available in most countries. But with low rates, this solution is very costly. And the other problem is that it does not offer a protection against inflation risk or risk assets. So you're not able to get a premium for these high risks. Another factor why people don't like this system is that the conversion is irreversible. So capital cannot be passed on to younger generations. So people have very little appetite for these systems in countries where the system is not compulsory anymore, like in the UK.
What can we offer under those conditions, which type of innovative solution for this period, of this retirement? First thing we can propose, and we'll come back on it, André will elaborate on it. First point, liquefy your real estate. It may be via a sale to occupied life annuity, or have mortgage and the works of the chair in partnership with Crédit Agricole would like to offer innovative solutions to liquefy this real estate assets. Second point, which is not incompatible, on the contrary, it can be combined, is to invest available savings to generate target revenues, careful with the risky assets. So it can be a variable annuity investing on the equity market, protecting the individual from the longevity risk, but taking part in the performance of the equity market, or it can be done with another dimension. So it would be very interesting. It doesn't exist yet, but the combination of those different bricks, combine investment products with annuities. We could imagine, for instance, an investment product with a deferred annuity, with a program deprogramming and a deferred annuity to offset the financial needs of the fourth age, or a gradual strategy to convert the investment into an annuity. This way, it gives flexibility, and we can play on this schedule, the conversion schedule. You can reduce the conversion to annuities when rates are extremely low, and increase it again if rates get higher. Okay, so on paper, the solution, the ideal solution exists. I'm mentioning here the optimal solution, but the problem is that there is no real appetite to sell for the insurance companies deferred annuities. The insurance companies say it is linked to the cost of the regulatory capital, and there is a risk of longevity. So with the current regulation, it is difficult for an insurance company to offer this deferred system. So we should collectively think over other solutions, and especially revisit the risk sharing. The individualization solution is not the optimal solution, so we should think of contracts sharing risk between the individuals and the insurance companies. What is the problem of the deferred sale? Well, the whole age class, the whole population lives longer than planned, and there is a risk for this. Risk for the individual is rather low. The risk that next year the whole age class lives longer, well, there is an increased trend of this, but for an individual, for the duration of the individual, the risk is low. So we could imagine contract sharing risks. The insurance company would mutualize the individual risk of mortality. The insurance company will cover that through pooling, but the risk of systematic longevity, the one which is very costly for the insurance company, could be borne by the individual. And just simply in imaging contracts, annuities, the benefits would be adjusted each year as a function of the development of the age class. So we should think of solutions which should be innovative, enabling the insurance companies to bear some risks. And just to finish, there is something which is dear to my heart and is important to me: to support seniors in the financial decision-making system. Seniors are vulnerable, especially when you are over 80. They lose some of their cognitive capacities, especially if you have a reduced mobility and if you feel anxious. So it may have an impact on the cognitive functions, and therefore the financial abilities are lower. When you assess them, it's a reversed you profile when you're old. It's a you when you're young, you learn step by step, and then it's a reverse you when you're old. This was assessed in getting older, the old people become impatient, and it is often associated to less planning, family planning. All those factors are risk factors, which may be aggravating factors. And this makes a financial decision more complex, combined with a low interest rate context where it is necessary to run risk. We need, therefore, to have tools for financial planning for retirees. And when you look at the offer available, you do not have much things. For the wealthy people, yes, okay, but for the robo-advising tools, concentrating on investments before retirement, you almost have nothing. And so there are needs in that field. So to conclude, we need to have innovative saving products and customized ones. One key message is that the retirement phase should be an active investment phase. It's a natural extension. We have to liquefy the wealth, secure the wealth, the assets, and information should be made available and support as well, so that the retirees can really understand the financial situation, assess the risks and the needs, and the state and the public authorities and the financial services have a role to play to offer these type of services and financial support. This is it, François-Xavier. Thank you. Okay, you have described where you set the stage, and we need to have a combination of different products for the seniors and see how they can reuse the cash. Okay, Mathilde VIENNOT. Mathilde, we have known her for some time now, chief economist of the French Corporation of Insurance Companies, and she is an economist at Stratégie. She published a wonderful paper about a year ago on the assets of seniors in discounting the current value of their pension, the pension they're going to receive. It's an original approach leading to some conclusions, and it will shed some light. Thank you, Mathilde, for being with us. Thank you for having invited me, and thank you, François-Xavier, for this panel discussion. Okay, so the financial autonomy of seniors. This topic came back to the panel discussion of France Stratégie because we wanted to know whether it would be a good public policy. Let me recall that the objective of the Social Security is to provide an income to those who do not have an income, and is there another type of public policy financing this fifth branch or completing this? In order to better understand the financial situation of seniors, we need to see their personal wealth and all their incomes so as to help them and help them compare. So what we've been doing is the following. We created a retirement system. It is the sum to update for all individuals since they have gone into retirement till their death. This way, you take into account the level of pensions and all questions related to life expectancies and the inequalities it may entail. And it will be possible to compare these retirement assets with, so the outcome is that the individuals have a retirement assets of 440,000 euros. It is above, it is plus 20% of the private assets. When going into retirement, it's about 300 euros, which is very interesting. And it is higher for women. What Marie said is very correct. Their pensions are smaller, lower than the pension of men, but it's going to be offset by a longer life expectancy. They are going to spend about 26 years when retired against 21 for men. And therefore, they're going to get the survival pension more. This is it for the retirement wealth. If we look at the private assets of seniors, as Marie said, we see that the distribution of the assets per age, well, the private assets grow with age. The maximum is reached when they are 30 years of age with 300,000 euros. If we focus on the age over 85 years, they have on average 250,000, which is much higher than the assets of the people who are 40 years of age, around 200,000 euros. The second indicator we can look at is the share of households, or the number of households per age having no assets at all. And what we see is that the lack of assets is very seldom among the elderly, especially those who are over 85 years old. Almost 75% of households have an assets over 50,000 euros. And to address the question of dependency, in the survey on the personal wealth of people, we can identify households whereby at least one individual is handicapped or having problems in their daily life. If we only look at the households over 75 years of age and one member is handicapped, in that case, the average assets amount to 230,000 euros, higher than the assets of the individuals of 40 years old. If we have all this in mind, we may wonder what would be the right public policies to secure the autonomy of the elderly. We see three of them which would deserve being highlighted. The first one, let's say that the whole dependency or a portion of the dependency should be taken care of by the community. In that case, we have to find the sources of funding, and one possible source would be the indexing of the assets. So we are calculating what would be the effect of this tax, a dependency tax, on the tax on inheritance tax. Second type of public authority, if we consider that the dependency costs should be borne individually, in that case, we have to see which public system is efficient to remobilize the assets and favor the facilitate the inheritance, or to tie up the dependency support to the assets. And the last public policy is solvency, and the solvency of the dependent people in activating their real estate assets. I would not like to infringe upon the presentation by André Masson, but we know that the assets of the elderly are made up mainly of the real estate assets, mainly the residential home. By nature, it's not really liquid, and the fiscal system or the tax system in French does not facilitate the liquidification. However, a portion of those properties remain unoccupied when these people have to go to the retirement homes, and therefore the public authorities have to give some avenues to explore in order to activate this. Thank you. Thank you very much. It was very interesting, very fruitful, and it is one of the first financial products you are giving. So you say that the sum of retirements represents 400,000 euros, and there's the first financial product the elderly do not have an easy access to, is the loan. It's not possible to borrow when you are over 70 in France. We had a very nice survey at the chair. We compare borrowing in various European countries. In the Netherlands, you can borrow whatever your age, and however, the longevity risk expressed by Mary doesn't play. So you have to do a lot in this financial product panel. Among the strategies of Arnaud, one was at Prévalor, there was one strategy. It was a partial life annuity developed with Sophie and especially Arnaud Jacques-Henri and Jacques-Henri David, through a solution SOFIPAD. Jacques-Henri David, no need to introduce him, financial expert at the origin of OSEO and the Public Investment Bank, and he got interested in those matters, and Jacques-Henri David is with us today. It's a pleasure. Up to you. Yes, can you hear me? Yes, we can hear you perfectly. Okay, I'm very happy that you give Arnaud and Zach and myself this possibility to talk about the work we've been doing together, all the more than we had a lot of contacts as well with a number of participants or members of the chair. So, first of all, this work is completely personal. In this matter, we do not represent anybody else apart from ourselves. The only goal is to try and be useful to the community and to open up possibilities in order to address the topic of dependency. That's the second point. How shall I say? We have been reflected upon the financing of dependency. It's very simple. You know the topic even better than I do, I imagine, but the longevity, the greater longevity, because of thanks to formidable medical progress, is such that there will be more and more elderly people, more and more dependent people, and given the cost of dependency, well, we have the feeling that it will not be possible to fund it just with public resources. But if I allude to the year 2020, apparently the budgetary constraints are no longer the ones they used to be in the past world. It was just a little aside. But joke aside, one of those days, well, the financial constraints will come back as a boomerang, and it's clear that the fiscal resources won't be enough. So we said to ourselves, we have to find a mechanism which is quickly put into operation and which allows to finance the remaining balance for the people dependent. And we made the following assumption: the elderly, and I heard the figures which have just been mentioned, the order of magnitude. which are good for our argumentation. Those people over 70 or 75 years of age, they have a significant property assets, 230,000 euros as an average assets if you are over 75, and if one member of these households is handicapped. Out of the 230,000 euros, I'm sure that there is quite a lot of real estate, but how can we mobilize these real estate assets to help funding the dependent people and the remaining amounts they have to pay? So the system we are suggesting to the community, to the French financial community, the banks and the state, of course, is a simple system whereby we imagine the possibility of complementary funding, provided someone becomes dependent. Why have we made this decision and followed this approach? For a very simple reason. I observed in my past professional life and in my past associated life that people do not want to subscribe dependency insurance premia when they're 50 or 60, when they're healthy. They want to see that later or check it's going to be costly. And in fact, we don't do it. However, when someone in your surrounding, in your environment becomes dependent, then it triggers a mechanism. Everyone says, okay, we have to find a solution to make sure that our life is not completely reversed or disturbed. And in that case, everyone is ready to check what they can do. So the idea is to make a potential offer, a dependency borrowing a loan offered by the banking sector. And when you start being dependent, you can subscribe to this loan or not. The amount of the benefit, it may be, or contribution, it may be monthly or quarterly. It will depend on the degree of dependency. The more dependent you are, the greater the contribution will be. And you can trigger the system with a payment used so that you can carry out a few works at home, ergonomic work, so that the person can stay at home and not go immediately to the retirement home. So it's an additional funding. I have to be brief. Is that right? Yes, yes, because, well, it's very, very interesting, but we understood the architecture of the project. So the rationale behind this is to make sure that it is available very soon, and it can be available very soon. It's just in 5, 7 years, 10 years, we'll need to have a guarantee fund to cover the longevity and real estate risks. But the idea is to have a loan with an almost zero interest rate with a public guarantee, with an additional contribution, with a small contribution, 0.5, 1% to a guarantee fund, so as to secure the longevity risk. We live longer than what we thought, and possibly the risk of a lack of assets. This risk being very low, by the way, when we do the calculation. That's a simple idea. We need public establishments securing fundings. Banks will take care of the distribution, and the state will guarantee the borrowing capacity of the public establishment called SOFIPAD. In a nutshell, it's very clear. Thank you very much. It's not far away from the other constructions, but it fits into the landscape, and it's very interesting. Laurent, SOULAT, an economist at Caisse des Dépôts, we know well as well, who've been working a lot with us, and the Caisse des Dépôts gets interested in the valuation of the assets. And we have partners, you all know, like Vieuge, we could have invited as well. Laurent, the floor is yours.
peu sur l'ensemble de ces travaux.
And tell us about your works. Please be brief. I'll be very brief. I work on the retirement dimension at Caisse des Dépôts because we are a retirement or pension manager as well, asset manager. So my goodwill works on retirement and by extension the way people project themselves into their retirement, the standards of living once a retiree. So that's what I'm going to focus on, and not really the life annuity. But André will be talking about the life annuity because we alluded to that last week. And it will be complementary to the first two presentations of Marie Brière and Mathilde VIENNOT. The standards, the levels, the dependency and the significance of the retirement in terms of assets. I had in mind the works of the Orléans Group working on that, and they produced several papers and they opened up this field. I do not know everything, but it was rather interesting, and it showed the significance of those rights to get a pension. And then come back to the way the people project themselves into their retirement, mainly based on the asset surveys and the PATE works. The average pension in France in 2008, according to the latest report of Dres, it's 1,500 euros per month. For out of the 16 million retirees in France. The average standards of living for the retirees is slightly higher. It depends on the different indicators. A symposium was dedicated to that by the Corps 2 years ago on the standards of living of the retirees. Let me give you just a few figures. This is 105 and 100 against 100 for the population, so 105 for the retirees. But there is a drop in the standards of living with age, and from 80 years of age, more or less, the standards of living of the retirees goes under the average standards of living of the population. So there is an impoverishment with age. And the second observation as well, if we take everything, André, you will agree, if we take the 60s, they hold 60% of the financial assets and 60% of the non-financial assets. That's the observation. And then André can elaborate on that. I got interested in the developments per generation, and I have not found anything quite recent on the overall levels of pension per birth year. There is an old working paper by Patrick Aubert from Dres dating back to 2011. There is a peak for the pension minimum. It was 600 euros so this peak, 15 or 20% of the generation weight. And so the minimum pension weighing a lot and weighing a bit less with the more recent generations, because there is a sectorial effect because of the employees working in the agricultural fields. And there are a lot of employees receiving the minimum pension. And another survey was produced at the beginning of the year from INSEE and comparing the retirees who went into retirement in 2013, how they were in 2010 and now in 2016. They compared this, and some interesting information. The main conclusion is that there is a drop in the standard of living, of course, a loss of income when you go into retirement. If you look at the consumption units, it is not as visible or in terms of standards of living, but this drop accounts for about 7% for women and 9% for men, okay? Oh, no, so not the standard of living, but a drop in income. And for the 10% of the poorest people, in 2010, they have an increased standard of living because of in 2010, they lost their jobs, and in 2016, they can get their pension, and 10% of the wealthiest have a drop in revenue by about 27%. Altogether, there is a reduction in the inequalities with the going into retirement, especially due to the solidarity mechanism included in the pension systems.
So what we can say as well is that, and that goes along with what Marie-Brière said, 10% of people were deemed to be poor in 2013 before going to retirement. There are only 7% in 2016 once they'd gone into retirement. So there is a reduction of poverty amongst retired persons with the obligatory pension scheme and national solidarity. And now, following that, or behind that, there are certain differences and disparities, and there is an expected reduction or drop in replacement under the effect of reforms on retirement, the 2010 reform, with a slight increase of pensions, but with the difference in the length of or delay in departure into retirement, which has had the adverse or opposite effect. But there's an expected decline in pensions because of economic downturn and simply under the impact of reforms and the indexing of retirement pensions. So over 2015, 2030, there will be a swing or a shift where there will be a slightly higher standard of living for people who are working. Now, to complete this picture, what we found is that people who anticipate in a reduction of their replacement of their revenue will extend, prolong their work or continue to work. People tend to add another 5 years before going into retirement, simply to compensate for this loss in income. And there is an increase in immediate savings so as to compensate for this reduction or decline in revenue. This was something that was revealed in the Pater survey. And the last comment we make was finding by the Caisse des Dépôts and the different research departments at Paris was that it's not retirement that's going to cover the risks of, for example, extended life expectancy, because it doesn't concern all retired persons, and it doesn't concern the entire life in retirement. So funding has to be found elsewhere. Thank you, Laurent. That's very clear, very interesting. André, the floor is yours. This morning, we had our colleague from Yale who talked about legacy tax. Now, I thought André is going to talk about that. So, André, over to you. We can't hear you. You have to open your mic.
Activé. Voilà.
André, on ne t'entend pas.
Non. Eh ben, je ne sais pas où c'est. Désactiver le son est activé.
C'est bon.
C'est bon maintenant.
C'est bon, voilà, d'accord. Alors bon, moi j'ai beaucoup aimé les interventions précédentes.
I was very interested in the previous presentations and comments. This would really substantiates a number of things I wanted to add to. Now, just something concerning the poverty rate of elderly people. France is in second position behind the Netherlands in the Eurozone. And this poverty rate has reduced over the last 20 years. It's not the case of Sweden, Germany, UK. They have overtaken us because they have a retirement system which has a basic retirement pension which is high. Now, there is also a problem there's a gender inequality. We have a real survivor's pension. They have a sort of compensation system, but in France we have a real survivor's pension, which is therefore. Now that plays an important role. Now, I'm going to talk about the loss of autonomy of senior. The risk of loss of autonomy is increasing at the moment with extension of life expectancy and because pensions are declining. And the third point, which is family support, which is less there's less support. Why is there less family support? Well, it's simply because of geographical isolation. So in a recent article of the review Risk, where we had the point of view of an insurer, and this article insists on prevention of dependence to reduce cost. The interpreter apologizes because the sound is breaking up at times and it's difficult to follow the speaker. Now, with less family support, the dependency ratio is going to increase much more than what was indicated in previous reports. And this is another risk that is going to be endorsed by the state. And so in this article, talk about the importance of assets and different level of assets amongst retired persons. I'm going to insist on 3 points. So how to finance dependence, what products that will be adapted to address the problem of dependency. The first question that Rodin raises, the fifth risk for social security system, it may occur in the future, and this is something that has been discussed since 2007. There's a problem of financing of pensions. We have to increase the cost of work by more contributions. So there would be really a greater awareness amongst working people saying, I'm contributing to my retirement, and then retired persons saying that I'm contributing or saving for my dependency or covering the risk of my dependency. There's another aspect that not everyone will accept. So the pooling of assets for pensioners will be a way of paying for the cost of the loss of independence. So the first proposal would be that the different age brackets should therefore contribute to support to the older age brackets using their assets. I'm not talking about wealth tax, but that people's assets should be used to contribute to paying for the support of the older people. For example, 60 plus bracket have a lot of real estate and a large proportion of financial assets. Now, this is not necessarily very evident in the data that we collected. The interpreter apologizes because the sound is very, very poor. Now, if we look at the different age groups, we can see that there's a plateau as from age of 60. Now, behind this context, there is increase in assets amongst older generations. Not only is the increasing, but inequalities of assets at high ages is much higher than at a younger age. It's a given moment in time where the assets are used as a substitute for people who are in a state of dependency. So the idea would be to fund a system of public coverage, and that would enable baby boomers to start to fund for their dependency, and would also incite people to donate, because the donations would be defiscalized. So why hasn't this hasn't been taking off of contracts for insuring against dependency given all the years that this problem has been raised, and the size of the market is relatively reduced, and there are a certain problem of people who are not eager to insurance. Now, to add, I would agree with somewhat with Jacques-Henri. I would be for a reversed mortgage that would be used to fund coverage for dependency, coverage against the risk of dependency. This would be something would be kick in once dependence had been assessed or praised for a limited amount of time, and this would provide better financial conditions. This reversed mortgage for dependency, it would not be a private-public partnership, but would be a private initiative. This proposal has been made in the report. We have no more sound. Oh, yes, now it's back again. Okay, what can we say about this type of product? It's not good for prevention because it is only triggered off when the risk is averred, but occurs. But it prevents too much savings or a savings glut, but also they keep this as a sort of a life insurance, rather consuming or investing this savings. Now, talk about reverse mortgages and the product that Arnaud talked about. All of this was fine for prevention, but doesn't really do anything for dependency, because people tend to stay for dependency. So we might have less real estate, but fewer sterile savings accounts that aren't used in the economy. So we have to remedy this situation which we have a savings glut and have more of a funding of the real economy. They should be encouraged to invest in new long-term financial instruments that would be productive for the future. Environment, infrastructures, and also in the building of accommodation and so on and so forth. So we need to encourage people. So there needs to be the carrot and the stick. So the stick would be taxation of through inheritance tax. And secondly, these new financial products I'm referred to could be passed on through 2 generations because we'd need them to last for a minimum of 25 years. So the son or the daughter should be able to inherit the scheme from the parent. So we need to have strong financial innovations to cover risks of loss of autonomy. These long-term financial instruments that would be that could be inherited. Now, to finance future investments, the state often uses public borrowing. Now, if we want acquirers to be French within France and should be senior citizens, so we need a system such as one I propose. It could take the form of a new life insurance that would cover a 25-year period that would fund the debt for the public debt, and this would be a new extended 25-year life insurance. Thank you. This is fascinating, and it's really an interesting answer to all of the questions we have raised in this roundtable. The question of investment of the savings of senior citizens and to find products that provide security for their assets. We talked about the concept of lack of insurance coverage. So this is an important topic. We don't have the time to have a discussion, but we will organize another conference on this topic in a tribute to Arnaud in February, when we'll be able to, or like the next meeting. There is, looking at the screen, see the older people have lots of libraries, and when they're younger, they have fewer books and more bottles. And I was wondering whether age was not represented by a greater number of books compared to younger ages, where there are more bottles mixed with the books. Thank you, François-Xavier. Goodbye.